Patel is holding a press conference. We'll take you live there. A short while back, the RBI had announced its fifth bi-monthly policy review, and the RBI governor is spelling out the details.
Coming to the monetary policy decision, in its October resolution, the Monetary Policy Committee took a calibrated policy judgment of a reduction of 25 basis points in the policy repo rate on the basis of its assessment of the inflation path for the rest of the year, based on the information available up to August and high-frequency indicators in September. Inflation outcomes in September and October, as well as the latest projections for Q4 2016-17, vindicates this stance. It may be recalled that in October, the MPC envisaged a trajectory taking headline inflation towards 5% by March 2017, with risks tilted to the upside. Since then, a couple of risks have waned. One, the disbursement of salaries and arrears under the 7th Pay Commission's award has not been disruptive to inflation outcomes. Two, the extension of 2 months given to the Ministry of Finance to issue the notification on higher allowances under the Commission's award could push its fuller effect into the next financial year rather than this financial year. The committee felt that it is now important to ensure that the targets of 5% for Q4 of 2016-17 and of 4 plus or minus 2% for the medium term are achieved. This assumes critical importance in view of the stickiness in inflation, excluding food and fuel, what we call core. The recent rising profile of international crude prices and the continuing firmness in the prices of some salient food items. Accordingly, the MPC was of the view that given the reduction of the policy rate of 25 basis points in October, which cumulated to a reduction of 175 basis points since January 2015, a further reduction in the policy rate is not warranted at this juncture. It may be recalled that an incremental CRR was applied on banks' increase in net demand and time liabilities between September 16 and November 11, as part of our liquidity management operations to manage the return of specified banknotes into the system as deposits. This was intended as a purely temporary measure to manage the transition from an exclusive reliance on LAF operations to a mix of instruments, including the MSS issuances. The government has proactively responded to the situation by enhancing the limit of MSS securities to 6 lakh crores or 6 trillion rupees. This has enabled the withdrawal of the incremental CRR with effect from the fortnight of December 10th. Banks will no longer have to bear the burden of the incremental CRR, as they will be adequately compensated through the coupons on MSS securities. I think we can, may I request before we get to the question and answer, first Mr. Gandhi to apprise us on the issues related to the withdrawal of legal character status of the notes and the currency management.
Thank you, sir. There have been several questions about the decision to withdraw the legal tender status of ₹1,000 and ₹500 of the old series notes. The motivations for the decision are to deal with the problem of high-quality counterfeit notes in these denominations and unearthed black money that may be held in cash. The decision has not been taken in haste, but after detailed deliberations. There had to be a high level of secrecy surrounding this decision, and the fact is that such a large country was indeed taken by surprise when the decision was announced. The Reserve Bank and the central government were conscious of certain immediate difficulties that the public at large could face, and all efforts were made to minimize them and mitigate them. The problems of the common persons were at the top of the policymakers' radar, and all dispensations were calibrated to address them without at the same time jeopardizing the achievement of the larger policy objectives. The Reserve Bank and the central government note presses are working to their full capacity, and all efforts are being made to reach the notes to every part of the country. In fact, during this period, that is from 10th November 2016 to 5th December 2016, the Reserve Bank had supplied to the public banknotes of various denominations worth near about 4 lakh crores of rupees. As regards lower denomination of the notes, that is rupees 100, 50s, 20s and 10, the Reserve Bank over its counters and through bank branches all over the country has supplied 19.1 billion pieces of denominations in this period. This is more than what the Reserve Bank had supplied to the public in the whole of the last 3 years. We reiterate that there is adequate supply of notes, and hoarding of notes helps nobody's cause. We also strongly advocate the public to switch to digital payment modes, given that there are several options, there are adequate safeguards, and there is an increasing acceptability of this mode of payment by a large number of recipients.
May I request Mr. Bumta to say a few words, and then Mr. Vishwanathan.
I think I may take this opportunity to speak a little bit on the subject which was most discussed in detail in the last policy, that is around the asset quality. I appreciate that as of now the questions and focus in your mind is elsewhere. But nonetheless, very briefly, from the September quarter result which has come from the banking system, while there had been an incremental percentage of gross NPA and net NPA, there had been marginal reduction in restructure advances, and after blending two, there has been a slight uptick in the overall level of stressed asset in the banking system. But there are few things which need to be noted. Number one, the formation of incremental NPA has decelerated. The provision coverage ratio at the system level has slightly improved, and compared to relative to the previous year, in this half year, the recoveries have been better than what they were in the corresponding period, and the write-offs have reduced to some extent. So, as in past, maximum NPA continue to be contributed by the industry segment in the asset portfolio, and the usual 5-6 sectors which were showing the larger stress, it continue to remain so. Thank you.
Yeah, from the regulation side, basically the fact that there has been a deceleration in NPAs, the demand for dispensations has come down. What we had announced in the last policy, we talked in terms of taking the S4A, but in fact, if you see what we did, we went a little beyond that. We allowed the banks to, implement S5 by 25 even in fewer cases, up to 250 crore rupees. And of course, last week we also issued the large exposure guideline. The idea being that one, we need to deal with the current stock of NPS, but also we tried to find ways to reduce the accretion to the stock of NPS. That's the kind of effort that they done.
Thank you. We'll now take questions. I'll start with Pradeep Pandya.
सर, सबसे बड़ा सवाल जो सभी लोग इस समय पूछ रहे हैं कि ये जो लाइनें लगी हुई हैं, आपने जैसे कुछ डिटेल्स दिए कि कितने नए आपने करेंसी नोट्स जारी किए हैं, आपका क्या असेसमेंट है कि अभी कितना डेफिसिट है, कितने और कैश आपको देना पड़ेगा, प्रिंट करना होगा या बैंकों को सप्लाई करना होगा, और कब तक आपको लगता है कि जो आपने विड्रॉवल्स पे लिमिट लगाई है वो आप हटा पाएंगे और जैसे 8 नवंबर तक था वैसे ही एटीएम और बैंक से पैसे निकल पाएंगे?
Thank you, sir. As I mentioned in my opening remarks also, large quantities of notes in various denominations have already been supplied to the public, and it is continuously being supplied also. So the tendency to hoard, that's what is we appeal to the public, that they need not worry about availability. It is continuously coming. So if they would freely recirculate the notes that they have, then this problem will not be there. So that's what we are saying continuously. We are assuring the public that continuous supply will be coming along. and about the limits to be revised. And that is a constantly in our radar. Constantly we are recalibrating the needs of the public and accordingly modifying it.
सर यानी अभी आपका असेसमेंट क्या है कि कितना डेफिसिट है, कितने और?
Now, next question, please. Ira.
Governor, in your statement, you talk about the fact that the impact on the economy will be transient, and you go on to say that a fuller analysis, I'm not quoting the exact words, is awaited. Did the Central Board of the Reserve Bank of India recommend this to the government in its judgment? How did it make its judgment if they didn't have an understanding of how the economy is going to get impacted? And how long will this replacement process take, Governor? We really would like to know that. Because the longer it takes, the more the hit to the economy.
When we discussed about the withdrawal of legal tender characteristics, various possibilities and various impact has been analyzed, and the assessment that we have made is that with the available stock of notes and the production plan, based on that, we were confident, that was our belief, that we could meet the requirements of the public. And that's why just now, as I mentioned, 19 billion notes, which was equivalent to what we supply in 3 full years, that was in our custody and which we have given to the public. So that is why the assessment which have been made, which included the possible impact, temporary impact that has been made in the reference have been made in the statement also, that has also been noted.
So, Governor, this was... Yeah.
Just add to that. I mean, the motivations for the decision were to deal with the problem of high-quality counterfeit notes and unearth black money that may be held in cash. The decision was not and has not been taken in haste, but after detailed deliberations. The consequences that have emanated from that were taken on board, and that's why the planning, the process, and the implementation was what it was, keeping in mind that high secrecy had to be maintained. And the central bank and the government were conscious of certain immediate difficulties for the public at large, and all efforts were made to mitigate them. As Mr. Gandhi said, and I would like to reiterate, that the problems of the common persons in this context were at the top of our radar. And all dispensations were put into place to ensure that the period for disruption is the minimal while we recalibrate our note supply to the denominations that were not withdrawn in terms of the legal tender character.
Is it March, sir? Is it June?
RBI Governor Urjit Patel addressing media persons, wherein he spelt out the monetary policy statement which was announced just a short while back. RBI has kept the repo rate unchanged at 6.25%. Now remember, this was the first monetary policy review which has been put forth after the government's demonetization drive. The last policy was reviewed in October 2016, and it had then cut the repo rate by 0.25 percentage points, and repo rate was at 6.25%, and now it remains unchanged. In other news,